Imora as a group has been in Africa for 50 years, so in terms of expertise, I think very few competitors can compete. We do a lot of research on the African consumer. That is a very big theme, not only in South Africa, but I think ex-SA also. If you look at projected growth figures for Africa for the next year, 6.5% to 7%, much better than any of the developed worlds. So what's happened in Europe and in the US hasn't affected Africa. The growth is largely driven by the consumer story. So we're very bullish on that, and we like to follow local companies that moving to Africa, with the likes of Shoprite, Woolies, Mr. Price is also moving to Africa. So that's a big theme going forward. Another compelling valuation story, I think, are local retailers, not only Mr. Price, but the others in general, more the cash retailers. These stocks were trading on multiples of 35 times earnings towards the fourth quarter of last year. And results were poor, largely driven by the strike action on the mines, and these shares got smacked by foreigners. They were the ones in the first place that re-rated the stocks from 16 Ps to 30 Ps. And currently they're trading on multiples, Mr. Price is a good example, of below 20, so I think it's a very compelling investment case, certainly on a 2 to 3 year view. A growth forecast of 20%, so I think at a 19 multiple is not expensive to pay for a quality business. ROEs on our retailers typically range between 35 and 40%. Very well run businesses, and certainly I think what we're seeing from foreign mandates that we currently manage, the African consumer is a big theme on the retail side mainly. So I think that's going to continue for quite a while. I think Europe will remain in recession for probably the biggest part of this year, maybe recovering next year to about 0.5%, 1% if we're lucky. So, and, although valuations are cheap in Europe in terms of equity multiples, I still think it's premature to switch out of Africa or emerging markets into Europe. The other sector that we're still cautious on, resources, stocks appear cheap, but we aren't seeing any upgrades on spot commodity prices yet coming through. I think the slowdown or the non-expenditure in Europe, I think, will remain for a while, especially on the car-cat converter side. Chinese growth still doing well, good for commodities, but we are concerned that it will not be sustainable, or I think the rate of increase might be slower, which will impact on spot prices. So I think although resources seem cheap, I still I think from a risk point of view, I still prefer exposure to through local retailers into the African consumer story going forward.